So what is the holy grail in trading? Some people say it has to be supply and demand. Other people say it has to be market structure. Others will say no, it has to be smart money concepts. The reality is there is no holy grail, but there is certain things that you can't go wrong with. Certain things that I call primary drivers in the market. You can look at the market from a correlated perspective. A trend line is a correlation. A Fibonacci is a correlation, but they're not true reasons. They're not causative of why the market moves in the way that it does. So what I always believe in, instead of looking at the market from the lens of correlation, why not look at the market from the lens of causation? What truly moves price and how can we trade alongside that? Now in the month of May, this is month 6 where I've given every single one of my trades live ahead of time, fully documented. And in particular this week, we had one of our biggest weeks ever. As you know, I have a standardized partial taking system, meaning at 1 to 3 risk reward, I will take 50% volume. At 1 to 10 risk reward, I will take the remaining 50% volume. So a full take profit becomes plus 6.5%. But what's special about this week is we had 2 of them play out in the same session and 3 of them in the first 2 days of the trading week. So a very strong start to the week where we gained over 18% publicly, live, ahead of time, documented with full proof. And what I'm going to do in this video is show you the full case study, the full breakdown, step by step, exactly what I was thinking, exactly what confluences I was using, and then show you the full proof. So altogether, what I'm showing you is a full explanation, a live call out which can't be manipulated. I'm also going to show you my broker synced journal. And you know what? Because all of you are always asking, I'll throw in a MyFX book as well. So you can see from all these 4 points, this is real trading, this is real life, and this is how you should be looking at the market. And I'm proud of myself. I'll be honest. I've been doing this now for 6 months. I don't think any trader has ever done this, to document all of their trades publicly, live ahead of time. And again, total now we are over 61% in gain. It's something incredible. And one of the key takeaway points, one of the key focuses of all of my trades is this concept of time-based manipulation. So let's get right into it. So starting off the week at Monday, 6th of May, on Twitter, I posted a GBP USD sell signal. Look at the time at 5:02 p.m. Dubai time is exactly when I'm posting this on Instagram. If you look at my MT4 screenshot, at 4:59, I'm taking the trade. I'm doing my risk management. I'm entering my lot size. I'm putting my stop loss. I'm executing my position, taking a screenshot. This is M1 trading. This is very difficult to time. I don't know the entry 2 weeks before. I don't know the entry the day before. I know the entry based on 1 minute time frame confirmations. You have to have your post notifications on. It's very tight for time. 4:59, I take the trade. At 5:01, I mark up my chart for Twitter, and then by 5:02, I've posted it. So from the time I've took the trade to actually posting it, 3 minutes is the time it took for me to prepare everything, prepare the caption, and actually post it. 82,000 people saw this tweet. So as you know, there's no edited time. It can't be manipulated when this many people are watching all of my signals, and it's ahead of time. Now, this is the trade I took, and you see exactly that's the entry, and this is the reason I'm looking for. I'm basically looking at a time-based manipulation and an internal break of structure. So let's get into exactly what happened later on. I'll go onto my laptop and explain the full case study, but I gave a full commentary step by step on what exactly I was going for, what I was thinking. I said it was a 6 out of 10 trade. And then as price continued on, then I had my break-even protocol. I said, let's reduce risk first. And then I showed I'm doing the same thing myself. And then as price continued on, I said, look, this is what I'm seeing. This is actually very good stuff. I can see the sellers are still in control. Why? Because we had this build up over here. We had this run of liquidity. Smart money traders love that, which I mentioned so many times. And then we have price tapping in here. Smart money traders getting in. Now, smart money traders stop losses will be a high, quick inducement into that supply point. That is the confirmation for us. And then when we see price break that level, break of structure, the previous higher low that made the higher high, now making a lower low, that's when I decided, you know what, right here is going to be an entry. I didn't give it as a signal because I was already in the trade, but I said, watch out, I'm not taking this as a signal, but we can see the sellers are in control, so it's good to see. And then later on, we see that sharp reaction of the smart money trap inducement. Smart money traders getting in over here, smart money stop losses there, inducement into supply, break of structure, entry, and price melted. So it's cool to see that commentary as we are taking the trade. And you can see as I continue on, I'm in the trade, I'm break even now, and the full documentation at 1 to 3 risk to reward. I've taken my 50%. 1 to 3 risk to reward is where I always take my TP1, 50% of the volume, therefore I lock in 1.5%. And then you can see that over there, there's the proof of that. And then as I continue on, you can see the full commentary as it floats 1 to 6. And then I end up closing it out at TP2 at 1 to 10 risk to reward. I lock in another 5%. So 1.5 plus 5 5 equals 6.5%, bringing the total tally to all of my signals at 48%. So we can see the full trade playing out like that, reaching the 1 to 10 target. Beautiful stuff. So let's go into signal 48 that helped us get to 48% in total in the last 6 months, and this trade overall being a plus 6.5%. Let's break that one down in its entirety on TradingView. So on the screen we can see the full trade that has played out now. Obviously it's a few days later, but let's go back in time and see exactly what I was thinking step by step leading into the trade. And obviously you've seen my MT4 entry, which can't be faked because the time is there. I can't manipulate price action like that. And in just a moment I'm going to show you my broker synced journal so you can see the exact entry and execution and the dollar amount, and towards the end I'll show you my MyFX book so you can see everything is there. So going into this now, so on M1 things happen quite fast, so let's zoom out for a second. Let's go on replay mode. Let's go back to when I was entering and see the exact thought process leading into that moment. Okay, so we are on the M15 chart. I'm not too concerned with the higher time frame. As you guys know, I don't believe in the higher time frame in its entirety. I think it's important for newcomers. Just like when you're learning to ride a bike, you need your training wheels. But the reality is when you get more competent and when you understand intra-session movements, again, the goal for me is not to hold a trade for a week. I'm holding a trade for a few hours. I'm going for that session volatility. So what the daily time frame is doing, it's not too much of a concern for me because that takes weeks to play out anyway. So as long as I'm not in a major daily zone, a daily supply or a daily demand, I'm not really too concerned with that higher time frame, especially when I'm in the no man's land of the higher time frame. Then I stick to the intra-session time frame. So M15, what I can really see is clearly price is bullish. We've had a bullish push up where this was the higher low, this is the higher high, this is now potentially a higher low to go on to make a higher high. So that is one consideration. We are in a complex pullback. So why was I looking to sell on the M15 if the M15 is bullish and we're not in a higher time frame supply zone? It's because I'm playing intra-session volatility, time-based manipulation. I don't care where the rest of the week is going to go, the rest of the month. I'm concerned about the rest of the session. Only a few hours. So if the M15 is bullish, that's fine. I can still catch a short-term sell if I have the confirmations there. So what I was really seeing was this area is no supply zone. This is not a supply zone. It's a higher high. So we shouldn't be selling at higher highs. I'm going for this spike over here. So I want to investigate what exactly that wick is. So if we go back down to the 1 minute, even though it's a higher high zone, I want to see why there is a big wick there, and is that an inducement of sort? And when I see, by the way, this is my custom indicator, a tool that I built for myself, which you guys can also grab in the description. It's showing the time-based manipulation and a few other things, high of previous week, high of previous day, Asia range, all of these key things that I look at. This is my key time window, this gray box. So within this gray box is where my time-based manipulations of meaning happen. And what I can see is exactly in this time window of my New York window, we have this trend line over here and these equal highs over here and a strong inducement, a strong manipulation that led to a large sell-off. And we can see price actually went to make the lower low from there relative to this area. So I know that this zone over here is meaningful. I know that's an inducement manipulation zone, and it has also mitigated previous areas. This area is now considered mitigated. The imbalances are closed. So I know that price doesn't really need to come higher than this if this is a true supply point. So that's the area that I was watching price come into. Now, coming into the day, so we've identified a form of supply. It's not a major supply. It's not a higher time frame supply. In fact, it's a wick that's an inducement within a higher high. So not the most favorable area for sure. But again, I'm going for time-based manipulation. So when I look into this form of supply that has an inducement, the key that validated it is two things. We had an inducement and we had a seller's reaction, and in the time windows, actually three things. These three things together really validated the zone for me. So I'm going to add that into my confluence checklist. Now, when I see Monday, the day of the trade, I need to see what is price action telling me. So I always read Asia and I start to think, what is Asia trying to convince me of? Asia range is always forming a trap. It's forming a narrative to say, hey guys, it's day to buy, or hey guys, you should be really selling today. And then London and New York usually go against that consensus. So when I read Asia range, I'm looking for that trap. I'm looking for the narrative. And what I see over here is clearly a trend line. We see clearly this support level, then we have this inducement. That inducement leads to a push out, and then this push out leads to this build up over here, this inducement. So we can see we're locked in. We are actually range bound between that inducement tapping into that supply and then this inducement over here tapping into this demand. So right now we can see price is in a form of indecision during our Asia range. So who's in control? We don't know. So now that we mark out all of the seller zones and the buyer zones and the associated inducements, we can see price is locked in. Price is going from this supply zone to this inducement that led to this push down and mitigating that supply, which is also going and doing that build up. So what do we know what happens over here? Sellers are interested in that zone and boom, becomes a trap. becomes a zone of liquidity. So that's one thing to notice. And then we can see overall, as we are having this period of tug of war where the buyers and sellers neither are really in control, because we're going from supply zone to supply zone with mitigations and bearish inducements. And we are going from demand zone to demand zone with bullish pushes and bullish mitigations. So we can see that tug of war really happening. Now, after this mitigation over here, that mitigates this inducement demand, that's when we have a breakout. Perfect. So I know now the buyers are in control over here. Now, what the end of Asia range is telling me is everybody get into a sell. It's trying to convince everyone it's a seller's trend line. It's a seller's day. We have that bearish push down because we had this price point taken out. We had that bearish break of structure after making the higher high. Price is trying to convince everyone, get into sells. So what does that mean for us? We look for the opposite. We look for that trap and we say, nope, we're not going to be interested in that. We read price differently to everyone else. We see on Frankfurt Open, time-based manipulation. You can see on the Frankfurt Open minute, what we see is build up, inducement, and on Frankfurt Open on that exact minute, we had a mitigation of that zone. So perfectly on Frankfurt Open, by no coincidence, we got a mitigation over there that leads to that strong push out to take out all of these sellers in that trend line. And look how aggressive it is. Large bullish candles, large imbalances, and fast momentum. Then the London window kicks in. What is happening? Prices coming back into the supply zone and taking Asia high liquidity. So what are people going to do? They're going to think, this was all equal highs. This was my smart money zone. And then they got taken out. What are certain traders thinking? I just got wicked out. Let me try again. We're still in this supply zone. And they even get a few candles reaction on London Open. And that's the wrong move of the day. So that also gets taken out. So when I'm reading all of this, I'm thinking, okay, well, the market is clearly bullish and they're trapping in sellers. But that bullish momentum doesn't last forever. The buyers also weaken. And so we need to see when the sellers start to gain control. So the London window is out of question, and I'm not really too concerned with that one. But now I want to see what happens when I get my New York Open and this supply zone of interest, if anything is going to happen, if anything important is going to happen. So I always know that my Frankfurt Open is a trap and my New York Open can be a trap. These two key time windows are where manipulations occur or traps are built. So that's what I want to notice here. Just like the Frankfurt Open, we saw a trap. Did New York Open give me anything? So I want to read into this, and I'm clearly seeing certain signs where I'm getting this build up and compression. We're getting this run of liquidity, and then we are getting these equal lows to target. So what are certain people going to do? Trend line traders or smart money traders, whoever is supply zone traders, they're going to be entering here. Now, what do I see after that? I see, okay, we had this build up over here. We had that mitigation of that supply point, and then we get further liquidity and even a bearish break of structure. So now all of this is encouraging sellers to get in. That trend line, this trend line over here, this counter trend line over here, meaning to say there is a whole host of stop losses all over this region. Now what we also need to be aware of is we have this ascending trend line, which is a form of liquidity. Now, what do we know about this, which I call order flow? Consecutive mitigations. Boom, boom, boom. Consecutive mitigations. I say it's appropriate to get in, even especially when we have this inducement and then mitigation. It's appropriate to get in until price has left the zone. Once price is left like this, then it all becomes liquidity. So when I'm reading all of this and I'm seeing all of this sellers stop losses based on trend line, based on that trend line, based on supply zone, based on even this mitigation right here, there's so many areas, especially when we get that reaction. That reaction confirms there is intent right there. When I see all of this liquidity getting taken out by this move, then I know that was a vector. That was an inducement. That was a sharp push up on New York Open to actually create that trap. On New York Open right here, on my custom indicator, you see that dotted line? That's New York Open. Manipulation on New York Open to take out all of these stop losses. And now this trend line becoming liquidity that price is magnetized towards once it's left the zone. So next thing for me is price arrives in that supply zone that I just mentioned. And this is where I'm interested to give my signal. Time-based manipulation. My key window on my custom indicator is that gray box. So when price arrives into that gray box and I see this, I'm thinking, perfect, this is golden for me to get in. I just need to find an entry to get in. So I mark out this zone. And why am I interested in this zone specifically? Because we just read price action. It's very narrow because it's a very sharp push up, but I'm basically reading, let's do it in green, higher low, higher high, lower low. So we're actually seeing a bearish shift. We are seeing a bearish break of structure reacting off my supply zone in a key moment in time. Now, it's not the most confluence trade. There are so many more things we would like to have, but it's the time-based manipulation that really gave me the encouragement for the signal. And again, we had a 41% buffer from the last 6 months of trading that I was okay to actually give this as a public signal, even though it's not a 10 out of 10 trade. Now, I didn't want to have a tiny stop loss on this 1 minute refined IFC of 1.9 pips. It's too short. It's too small. So I actually had my entry all the way down here based on the M5 refined IFC, the 5 minute time frame refined IFC, which gave me a 4.5 pip stop loss perfectly within my Goldilocks zone between 3 and 7 pip stop loss. That's where I like to have it. So this 4.5 pip stop loss, and exactly on the open of my key window is exactly when I got in. And if you come into my Twitter, that's exactly when I posted it. So I posted it at 5:02 is exactly when I posted it, and I said this is the entry and this is my MT4 screenshot, and then obviously the full explanation that I showed you earlier. So that's when I got in. Obviously we break even on a M1 shift, but on a M1 I didn't want to give a full break even. I wanted to give a partial break even because I knew there was a capacity for price to come back over here. So I said reduce risk to here because I know that this zone could still have a mitigation. There's still an imbalance there. So I wanted price to really leave the zone and I don't get wicked out. So when I saw when I saw price close that imbalance right there, it's such a small detail, but when I saw this imbalance is closed, that fair value gap right there is closed, then I said, perfect, we can fully break even. And that's the details I was showing on Twitter. I was saying, look, that dot right there, that's when I could say, boom, we can break even now because the imbalance is closed, so you can do a full break even. These details make a difference, and that's exactly what I was putting on Twitter. So now when we've left this zone, perfect. Now I know I just need to wait for my TP1 at 1 to 3 risk reward right here, as always, standardized. And if I get that time-based manipulation, which I have, New York Open was the manipulation, key window was the reversal into supply. It's like clockwork to the minute every time. And then I got my lower time frame confirmation model, perfect as always. And now 1 to 3 target if I get that session volatility at a key moment in time of the day, and also liquidity and volatility, everything coming together. So I'd expect price to very quickly now start to melt and go towards my destination. What does it do? It once again closes off the imbalance. Boom, imbalance closed off, and now price is ready to go. You see how price is doing the same thing? This shows me who's in control. Imbalance closed once again. Sellers are still in control. And then I just waited and waited for price to go towards my TP1. This is where people panic and think, oh, it's a retracement, it's not working. No, we see build up, we see inducement, run of liquidity, and we see the mitigation right here. So we know sellers are still in control, all is well. Price hangs around. Okay, there we go. Once again, just like I showed you earlier, that smart money trap. We see it right here. We have this build up. We have this run of liquidity, smart money zone, real inducement, break of structure. So then this became another entry point. I didn't take it. I wasn't interested in taking it because we're already in the sell, but that could be a potential another entry. It's valid. Price tapping into that zone and then price swiftly leaving. So this is how you also read a trade to say if you're correct, if the sellers are in control, if you're seeing the things you want to see, and the time-based manipulation followed by consecutive inducement and consecutive mitigations in the direction you're trading. It's key and it's golden to really read price action accurately. And there we have it. Price taps into TP1. So when I go into my signals, there we have it. GBP USD sell signal 48, TP1 hit 1 to 3 risk reward, locking in 1.5%, brings the total tally now to 43%. And we can actually see right here, that's the execution that I took before you saw. And now you can actually see the actual trade hitting 1 to 3 risk reward. Perfect. And you can see the timestamp. It's 6:55 p.m. Remember, the signal was posted at 5:02. Signal posted at 5:02. So we know that this is always live ahead of time, everything documented. Now, the rest is just a waiting game. I know that we had this liquidity target right here. I know that I have this demand area over here, and I just need to wait now for price to go all the way to my 1 to 10 zone. And that's exactly what price did. It started to go very quickly towards my area of interest. And now, this is why I don't always love New York trades, because then I have to sometimes wait for Asia range to allow that position to play. But I've put my TP level there. It's ready and waiting, and I just let price do its thing to hit my 1 to 10 risk reward. Perfect. Build up. Same things always again. Build up of liquidity. Inducement. Where does the inducement go into? A supply zone. You can't make this stuff up. It's so regular, so consistent. It's the only way the market really moves. It's the primary drivers, as I said, and then slowly go towards our 1 to 10 target. Build up that seller's trend line to get who in, sellers involved, and then we have exactly that. So now 1 to 10 hit. Let's go back into our signals. And right here we have it, signal 48, 1 to 3 risk reward, TP1 hit, locking 1.5. I just showed you that. Now TP2 hit at 1 to 10, locking in another 5%. Trade total 6.5%, and total now 48%. And then you have all of the screenshots there, as I showed you, and the timestamps of everything. And by the way, it's not just me. We have, and again, a lot of people watching this, a lot of people actually taking it with me. People getting funded. People actually getting funded is crazy. People are actually getting payouts. And if you scroll through the comments, there are so many people that have shown they got funded, shown screenshots of payouts, shown screenshots of them taking the trade. This is full transparent documentation, and not just one trade. Anybody can do that for one trade. I've been doing this for 6 months now, 48 trades live ahead of time, and a full growth from 0 all the way up to 48% as of this trade. But again, it gets better from the next 2 trades. And remember, towards the end, I'm going to show you the full MyFX book. I'm going to show you the full broker sync journal, so you can actually see the full executions, the exact moments I got in, and the dollar amount as well. So stay tuned for that. So now that we've covered signal 48, reaching the full 1 to 10 target and locking in a plus 6.5%, we had a new signal now, which was signal 49 the next day. So it was actually right after each other. This one was after we are 48% up, a new trade taken, always risking 1%. And look at the tweet time. It was 5:58 p.m. I tweeted, and you can actually see 5:56 is when I took the trade myself. And then by 5:56, I've marked everything up. And by the time I've wrote everything, screenshots, everything documented, made the tweet, just 2 minutes later, I've actually posted it. So you can see exactly where I got in, exactly the MT4 before, with the time at the top, everything there for you to see. 53,000 people watching it. So it's not just something I make up. There's no edited sign. It's all live documented. And I'm giving the full explanation. I was also saying I'm looking at GU, but I have an element of doubt. Now, why do I have doubt? Is because we have this inducement candle that led to the higher high. Price is tapped in. So I don't know now if this is just going to go on and make a new higher high. So that's why I had doubts, but I'm saying I'm watching it, but I prefer EU. But if I see an opportunity in GU, I'll also get in. And then you see my full commentary. So when EU was break even, I actually gave this a signal 50 to actually get into those GU cells, exactly like so. So I gave both of them, and that was signal 50. And then we see EU gets break even when we have that break even point, which I gave at the beginning. And then we see the full documentation, GU getting in. I'm telling you guys when to reduce the risk, and moving forward, EU hitting TP1 at 1 to 3 risk reward, locking in plus 1.5%. And you can see my personal entry right there as well. Same for GU over here being completely risk-free, EU 1.5% locked in. And then over here, we have EU melting towards our destination. That's when we locked in the full 1 to 10 risk reward, another 5%. And you can see everything over there, everything documented over here for signal 49, my full execution, everything there, and also for signal 50. So you can see signal 50 right here, posted live ahead of time. 6:08 is when I've tweeted it. 6:07 at the top, you can see is when I've taken the trade. So it's as live as I can make it. And then you see the full documentation, other people catching the trade. And then GU final target also at 1 to 10. Both of these trades reaching the 1 to 10 target, both of these trades hitting TP2 and locking in for myself over $50,000. So let's see a full breakdown of this. And just to sum it all up, signal 48 plus 6.5%, signal 49 plus 5.5%. I actually exited it early, and then signal 50 plus 6.5%. All in 2 trading days, all live ahead of time to give a plus 18.5%, bringing my total tally now 50 trades after 6 months, 61.5%. So let's show you all of the proof now on TradingView, my BrokerSync journal, and also a MyFX book. So over here, we can see a very similar thing to previously. It's not a bearish market, it's in its entirety, but we can see price reacting off certain supply levels. That inducement candle, the same as GU on EU over here. Then price doing a bearish push, tapping into that supply, and then having all of this come lower and actually forming that lower low. Now, we don't know if that's a lower low or an inducement of this liquidity, but that's yet to be confirmed. But the point is, I want to see price come into the supply zone and see if we have bearish intent. Let me show you the traps of the day. The same thing as always. What is Asia trying to convince us of? What is London trying to convince us of? And where is the manipulation and trap? So we can see over here, pre-Asia liquidity. Then this run of liquidity over here with a bearish break of structure. What is that telling everyone? Supply zone. Get in over there. When we see this liquidity over here and this run of liquidity, I know traders are getting into this zone, and those traders even entering, getting the executions and getting manipulated. When are they getting manipulated? At exactly New York Open. The trap moment that I mentioned, time-based manipulation. When are we getting these traders over here that are seeing equal lows, run of liquidity, and then 1 leg, 2 leg, these buyers that are getting in, those traders, SMC traders that trade Frankfurt Open, they are getting induced when? That dotted line being Frankfurt Open, induced. London Open, showing that inducement right there, push down, then sellers getting in over here, them getting induced. So we can see left, right, and center, people hitting stop losses by just not understanding time-based manipulation and not understanding correct nature of price. So just so we can map them out over here, zone of manipulation, because sellers were getting in over there based on build up, based on run of liquidity, and then that supply zone. Who's getting out here? Buyers getting taken out here on that demand area based on that liquidity over here, that run of liquidity. And then Frankfurt Open, boom, manipulation. London Open, fake inducement. And then we have this build up, run of liquidity, push out, trapping these people out, inducing them out. Then it comes to this Asia high, supply zone, smart money zone, takes them out. And then we come to this point, take them out. So I'm seeing prices on chaos right now. It's taking everyone out. But the key thing is that manipulation that happened on my New York Open, where is that leading to? So it left me to this form of supply that led to this push down that actually made this low and actually took out this previous day's low. So I know, okay, this previous day's low has been taken out. So this could be a form of a bearish sign. Now, after reading all that manipulation, all of that chaos, again, liquidity is the essence of the market. And then the time-based manipulation is the key. This is when I thought, okay, where can I find an opportunity? As price taps into supply, I see all of these inducements. I see that liquidity, that build up right there, which again, I love to see, build up of liquidity, sharp push out into my supply. And then all I really took this trade off was this internal break of structure. Seems simple enough, but obviously the context matters. It's not the break of structure that makes it. It's not the time window that makes it. It's the context with these things. But again, when is it? On my custom indicator, you can see it in that gray box, my key moment of execution of the time-based manipulation. And I'm simply going for the refined IFC where I see the imbalance closure. That's where I'm executing off. And that's exactly where I give my signal. And exactly live ahead of time, you can see exactly when I took the trade was, in fact, let me show you exactly where I took the trade. So this is my broker synced journal, trade zella. I can refresh it so you see it's nothing doctored. And for the next trade GU, you can see everything as well. EU and GU, everything documented. Not only do you have my MT4 screenshots that I posted on Twitter, you can actually see I entered on this candle right here, my 1 to 3 risk reward exit there, and then my final exit over here towards that 1 to 10, I believe. So that locked in for me $24,000. EU locked in about $18,000. And the trade from the day before around $20,000 too. So you can see all of everything's here. By the way, I do recommend you have a look at TradeZella. I've been using this for about a year now. It makes a world of difference to document everything, journal everything, have everything in one place. So if you are interested in, find the link below and you can actually just go sign up. It's so worth it because everything stays organized. And journaling is one of those things that no one really wants to do. It's like homework, but when it's seamless, easy, it's linked to your broker, everything automatically gets uploaded and everything documented. You can see all of the reports, all of the data you need to see. And for me, yeah, everything is so convenient. So that's my GU and EU position. And same for EU. You can see exactly when I entered on that imbalance closure at exactly what time. You can see exactly what time I executed it. You can see exactly where I exited or what candle right there. That was the 1 to 3. And then the final closure was over here. This one locked in for me 18,000, risking about 4,000. So yeah, this is perfect stuff. EU there, GU right here. You can see exactly where I entered and exit. And not only that, you have my MT4 screenshots of everything as well. So everything is there. You can go check it for yourself. The timestamps, everything to verify everything is real. By the way, I'll show you my FX book shortly. So that's when I got in over here. And then when I see this break of structure in my direction, that's when I know, okay, price is going in my way. By the way, this is fun for me to just do. What is happening over here? Hopefully by now you're going to learn smart money traps are real. What are people thinking? Oh, look at these equal lows. 1 touch, 2 touch, 3 touch, all of this liquidity over here. Then we got a bullish break of structure. And right now, look, price is so bullish. We made this high. We have this run of liquidity push out. Who's entering in the zone? Dumb smart money traders. So I know that zone is going to be manipulated. I'm also reading things from my perspective. Imbalance closure at my entry. So I know that that's good for me. I have this build up over here, that run of liquidity for me, inducement, and then mitigation, close of the imbalance, perfect for me. So I know price is going to attack that and make a smart money trap. So what does it do? Price taps in, gives smart money traders a reaction. Hey guys, get in, and then boom, takes them out. By then, I've taken my 1 to 3 partial anyway, and so has the public, documented it all there. And then I just need to wait for price to hit my TP2, and that is perfect stuff. And when EU was break even and when EU was risk free, that's when I used that capital, that same exposure of 1%. I put it into EU. I didn't put it into EU and GU at the same time. I don't like having double risk on the same trade. So I put it into EU first. When EU was break even, I transferred that same risk now to GU. So I didn't have 2% exposed that day. I only had 1%, but when it was break even, I moved it over. So that's how I timed these trades, and the same thing on GU. You can look at the full analysis on my Twitter, but just to give you a bit of context, it's carrying on from the sells of yesterday. What are we looking for? We're looking for the manipulation. We're looking for the trap at the key moment in time. So what do I see over here? Clear buildup of liquidity, supply zone at Asia high. Then what do I see? We see, as always, time-based manipulation is everything. So when I enter my key time window over here, price taps into that supply zone, induces that trend line out. And once that inducement has happened, time-based manipulation is everything. Build up, run of liquidity into my supply, break of structure over here, strong bearish reaction. Price then comes back into here, closes the M5 zone, and then break of structure of the zone and so forth. So that's how I got in. I actually got in on the M5 candle right here, on the M5 refined IFC, M5 candle. And then same as always, it's a larger stop loss than usual, but not crazy. It's within my tolerable range. This was a 6 pip stop loss, so within my range, but it just means 1 to 3 is a little bit further away. But the same as always, 1 to 3 and 1 to 10 is exactly where I'm looking to take my partials. And that's exactly what I did. And then we have this build up, run of liquidity, smart money zone once again. So interesting to see smart money traders getting taken out once again. And then price slowly goes towards, or quickly actually, to my 1 to 10 on GU. And same goes for my EU position. Let's quickly run through that. 1 to 3, 1 to 10 fixed partials. And there we have it. And price even continued further and further after taking all of this liquidity. So beautiful stuff. So you can see now everything documented live ahead of time. Hopefully you started to see the key of time-based manipulation. Liquidity at key moments in time is everything. It trumps market structure. It trumps trend line. It trumps Fibonacci. It trumps over everything. This is how you really master the M1. You look at the high probability zones. You look for high probability based manipulations. Look at the traps at the key moment in time. Add in a lower time frame confirmation. And that's how I've been able to give 50 signals publicly live ahead of time over the last 6 months. All of my trades, MT4, timestamps, broker syncs, execution, everything is there. One last thing I want to show you is my MyFX book of the month of May. So you can not only see everything is there, you saw how much money I made, you're going to see what I'm shortly going to do with that money on the next vlog. I'm probably going to buy a new watch, as you see me do all the time. You can see the full analysis, full trade. Now let's actually show you the MyFX book. So what you're going to see me do is click refresh. We're going into a new page. It's refreshed and it's locked in. And you can see pop-up ad, but there we go. You can see me going through, and what do we have over here? We have plus 11.59% for the month. I've locked all of the fields, but what I want to show you is this one. Okay, month of May, my FX book, I refreshed it, plus 11.59%, the exact signals of this week. And yeah, why not just refresh it one more time for anyone that is just skeptical? Everything is there. Everything is documented, and you can see, boom, exactly the performance of this month. So ladies and gents, that should be a full documentation of everything. You've seen exactly my wisdoms and logic behind the trade. You've seen the live call outs for 6 months now. You've seen the M1 mastery, exactly the time-based manipulation, which is important. You've seen the live call out. You've seen the broker synced journal. You've seen my MT4 screenshots before and after, everything there, and even now my FX book. So as transparent as I can be. I'm not going to go too much into more detail, not always proving myself. I just wanted to do this one time just to say it and prove it. Not something I want to do every damn video, but everything is there. And the main reason for this is I want to open your eyes. Again, you can see the money I've made and the performance I've had. But again, this is 8 years in the making, and I want you to learn from my lessons. I want you to learn after 8 years what I truly figured out, what I learned, and what worked. And what I found has worked is time-based manipulation, liquidity, lower time frame models. These are so important. M1 mastery is so important, and being a restricted trader will always lead you to being a profitable trader.